Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is senior energy analyst Bob Yawger with Mizuho Americas for an update on the energy complex. And Bob, since we last spoke in August, really not much improvement for the supply-demand picture. I mean, we're up a little bit today, but trading where it is right now, it's not exactly the best case scenario.
No, it's not a good situation here at all. We basically ended driving season and have entered what's known as turnaround season right now. Refiners start to slow down the rate at which they operate. They start to prepare for winter heating oil season. We did have Hurricane Laura in the meantime, and in the process of Hurricane Laura, 10% of refinery utilization was knocked online, and as of today, it has not come back. We have another EIA report tomorrow, but the refinery utilization rate slipped from 82% of capacity to 71.8% of capacity. That is a gigantic slide. And there's not necessarily a good reason for refiners to want to really bring their refineries back up online. The product that they make, gasoline and distillate, are both trading below $10 a barrel. That's a very negative rate. Refiners struggle to make money whenever those numbers are below $10. So this is a bad area for refiners. They are not making money. They have no financial incentive to really bring these refineries up and run hot. And that we are only about 5 percentage points away from the all-time record low for the refinery utilization rate. And we're only in the second week of turnaround season. Usually that number does not crater until about the middle of October. So it's not a good situation here, Jill. All the crude oil that was running through refineries will now get stuffed in storage. That's not good. We're about 40 million barrels away from the all-time record crude oil storage high. We are over 80 million barrels above last year's storage level right now for crude oil.
Yeah, that certainly is a lot to digest, Bob. And you're also taking a look at some things within heating oil as well.
Yes, and like heating oil storage is about 175.8 million barrels. That is only 4.2 million barrels away from the 38-year high. Heating oil, refiners are going to switch their refineries into heating oil mode here over the course of turnaround season. That'll last about 5 to 7 more weeks from right now. So in the middle of October to the beginning of November, they basically have an emphasis on heating oil. However, with the heating oil storage already at all-time record highs, they're not going to be very incentivized to increase the refinery run rate and make a whole lot more heating oil. They're actually going to try and avoid that eventuality. There's just no money to be made in it right now. So that's not good for heating oil. It's not good for gasoline. But it's even really bad for crude oil because you won't need to run the crude oil through the refiner anymore because you're just making gasoline and distillate you're going to lose money on. So there's no financial incentive for the refiners to increase the refinery run rate and burn a lot of crude oil, burn off the crude oil that's in storage, burn off the crude oil that threatens to post an all-time record storage number.
And Bob, and we're certainly seeing it reflected in the stock prices. I mean, the energy space just can't get out of its own way. And, there's, of course, the risk for demand to decline even further if we were to get any sort of secondary shutdown. So my question to you is there any bright spot in the energy space? And if not, is there any relative outperformance?
There really is not. And you could argue maybe, and this is a stretch, that in the crude oil market, in WTI in particular, basically domestic barrels here in the United States, there's the difference between the first month and second month. The first month is cheaper. That's never good when the first month is cheaper than the second month. That implies there's so much crude oil that they're pseudo giving it away. But it's not as bad as international benchmarks. Brent, for example, which is WTI's rival international contract, the difference between the first and second month is very wide. It's about 60 cents versus 30 cents in the United States. When you get past 50 cents, you basically are starting to bang up on a phenomenon called super contango. When you're in super contango, you can basically buy the front of the curve, sell further back on the curve, and you're making to make money all day long. for folks that can take and make and take delivery, producers, oil storage type people, they print money on those super contangos. Ultimately, they start reaching for floating storage. That's when you know things are really bad. And we are on the cusp of floating storage right now in the Brent market. It is economical. It's theoretically economical right now. A couple more cents wider on the contango, and it will be absolutely economical. Now, what happens then? Storage levels around the globe just become super bloated. They're so high that they're putting crude oil to store on open seas. Never a good scenario, but that's what we're looking at. Not all that bad for a high-tech trade team at some of the oil majors. Some of the big integrated oil companies that can take and make delivery. Q2 earnings season, there was some expectations that they were going to get beat up really bad, but some of the trade divisions, some of these oil companies, they actually made a lot of money taking advantage of that super contango situation, and they actually booked a pretty good profit. And some of the profits on these oil companies last earnings season were not quite as bad as people thought. They actually did surprise a little bit, and the reason they surprised was because they took advantage of the super contango. Now they're killing the golden goose in the process, because they're just making so much storage that flat price slides off the face of the earth. But that's what we're looking at. We're on the cusp of having that situation repeat itself right now.
All right, Bob, great to catch up with you as always. Thanks for joining me on Trade Talks.
Thank you, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.